When it comes to your retirement, do you want to have the same old plan everyone else has? Of course not. You're unique and have your own goals and dreams. Don't be treated just like a number. This is your retirement. So it's time to think differently. And you're in luck because you found the Retire Your Way podcast with Dave Lopez, founder and managing member of ILG Financial. At ILG Financial, you won't find generic run-of-the-mill plans containing the same old cookie-cutter solutions. Dave and the ILG Financial team focus on building one retirement at a time using their Think Differently philosophy. And that means your own comprehensive plan with customized solutions built to achieve just one goal, yours. So put on your Think Differently hats and get ready to take back control of your retirement today. And for all the tomorrows to come, ILG's Financial Retire Your Way podcast was created just for you, and it's starting right now.
Welcome to the Retire Your Way podcast with Dave Lopez, founder of ILG Financial. Love to help you with some information here today on taxes and all kinds of things related to what you might be going through right now as you try to get to and through retirement, and that's Dave Lopez's specialty. If you'd like to call Dave and have a one-on-one conversation with him about your situation, call this number, 540-720-5656. 540-720-5656, and we'll give you that number again a little bit later on today. But this is Ron Stutz, and I love hanging out with Dave doing this podcast on a regular basis. And Dave, I hope you're doing well today.
I am doing great. It is sure good to be back together, you and me. I think we're a good team, and I sure love sharing this information together. So thank you for being here, Ron.
Well, I love the fact that you pass along such helpful information to the folks who listen to this podcast, and I have no doubt that today is going to be the same way. You know, we all suspected that tax hikes were headed our way, and we have discussed it on a couple of different podcasts earlier this year. And though we may have had an idea that taxes were going to go up, we are finally hearing from the IRS what some of those first tax changes might look like. Dave, what can we expect going into 2022 when it comes to taxes?
Well, a few things, and what you're going to notice here, it's not really bad news for 2022, Ron. We are starting to see some concrete plans materialize. Some of the stuff has not passed the Senate yet. That's the Build Back Better bill is in the Senate. That's going to be changed around quite a bit before they get done with it. Mm-hmm. But we're going to talk today on what's already approved and is going to happen for 2022. How does that sound?
That sounds good. I love talking about those done deals. So
yes. So the other stuff for now is just speculation, mm-hmm. right? And we'll speculate plenty. But for now, if you haven't checked yet, what you will start to see is a little bit of good news. Mm-hmm. The tax brackets all went up for 2022 because they're going to be adjusted for inflation. Now, don't misunderstand. That doesn't mean your taxes go up. It actually means the opposite. It means more of your money will be taxed at lower tax brackets. Mm-hmm. Let me give you an example. Okay. The top federal tax rate is unchanged. It's still 37% right now for 2022. So because the bracket goes up, less of your income now, if you're a high wage earner, will be taxed at 37%. So for married couples filing jointly, you will not enter the 37% tax bracket until taxable income passes $647,000, roughly $850. Mm-hmm. Okay. That's a jump of almost $20,000. So again, in a nutshell, all that means is that about $20,000 of your money, if you're a top wage earner like that, now would still be in the 32% bracket, a little bit lower before it's in the 37%. So it's a little bit of a help, and it's all because of adjusted for inflation.
Well, Dave Lopez, let me just say that I am completely stunned because it's not often that the government seems to cut us a break like that. So what's going on?
Well, don't get too excited, right? They didn't go out and cut the break. It was kind of built into the current tax code. So it's working to our advantage this year with this cost of living increases. This is not a gift, I will tell you, from Congress or the IRS, right? It's an automatic change that comes because of inflation, and because this is one of the repercussions, one of the few positive with this high inflation everybody's been seeing.
Right.
Everybody already has noticed, if they're watching, that their 2022, their Social Security checks will go up a little. What they're not advertising is that their Medicare Part B, which is a deduction for them, will also go up. All these things are a result of inflation.
Yeah. Well, we're already seeing the effects of the inflation, at the gas pump and at the grocery store and everything else. So it's really kind of tough. And, we're all just going to have to deal with that. But you are here to help us get through it efficiently.
Yeah. And looking across the board, I was telling you there about the top tax bracket. Across the board, most of the brackets have gone up about 3%. Again, don't misunderstand me. I'm not saying the tax rate went up. I'm saying the bracket that you're in to tell you how much tax you pay, the limit goes up about 3%. So that should help everybody a little bit, and every little bit helps in this high inflation environment.
Oh, absolutely. And Dave, can we assume that this is the only change we'll see for the year 2022?
Well, that's a great question. I would say we cannot assume that, Ron. One reason is that the Congress is feverishly trying to push through this massive spending plan, the Build Better Back. Is that Build Back Better plan?
Something like that.
Say it 3 times, right? It's through the House of Representatives. Now it is sitting in the Senate, and there'll probably be some changes. But their goal is to get this thing approved by the Senate and signed by the President before the new year. And it does have some tax issues. So, and even if that one's not done, of course, Congress can still push through individual tax changes and maybe even make them retro. So what the biggest takeaway is it's possible that we can still have tax changes in 2022, right? Most of the changes in that Build Back Better bill, most of them are targeted for folks, married couples making over $450,000 in adjusted gross income, and single people making over $400,000. So that's not as much as some people would think, especially if you're in the Northern Virginia, D.C. area, 2 working couples. You've got a lot of bills and a lot of taxes. And if you got a couple kids, that money goes quickly, doesn't it?
And the cost of living is so high. It really is. So,
yeah. So we may see more changes coming, even as early as, the first quarter of 2022. That's why it's important to stay plugged into us at ILG Financial. Keep listening to the podcast. Keep following us on our website, because we put all of this stuff into our blogs and our newsletters. If you're not on our e-newsletter list, please call the office and ask to be put on it. There's no charge. And then you can have access to our blogs and notices of every time we have a new podcast with you, Ron.
By the way, remember, you're listening to the Retire Your Way podcast with Dave Lopez, ILG Financial. And again, the number to call if you'd like to have a conversation one-on-one with Dave about your scenario, 540-720-5656. Long story short, there's got to be, there's going to be inflation. There's a massive debt to pay at some point. Somebody's got to pay all that back. And so all this stuff is kind of inevitable. And maybe, some of these things are going to come to fruition a little sooner than others. I think it's another example of why tax planning is so crucial. Something that may appear to not really affect one household or even appear to be a positive change can turn quickly and potentially just cause all kinds of havoc on your retirement plans or your budget. So folks have to pay attention and keep up with all of this.
Boy, they sure do. And when we talk to our clients, we call this, we actually has a name for it, and you'll start to hear it more and more in the media as it catches on, like sound bites do, Ron.
Right.
But remember the term legislative risk. Legislative risk. And basically that is a change that can affect your retirement accounts, can affect your income with this literally the stroke of a pen. A legislative change that means you have less money in your bank account than you did the day before. And you'll see that with a tax change. You'll see that with a change to how your 401k may be contributed or rolled over or taxed or anything like that. So more and more as taxes go up, which we believe they will, you will see this term legislative change change or legislative risk is probably a better way to say it, to your retirement, whether it's your income or whether it's your savings. The good news is there are things that we can do if you're betting on legislative risk. It's just a matter of getting with us and helping us work through it. So let's talk about, there's some other aspects that the IRS has come out with that are already in place for 2022. I don't want to get too off track, but I've got a passion for this, Ron, so yeah. I can ramble if you don't keep me on track.
Well,
right?
we all know that you're passionate about what you do, and most of all, that's because you love helping people, and so I'm glad you're passionate.
I do. So let's get back to it. We were talking about changes that are already approved that are going to affect us in 2022. Mm-hmm. The second one is the standard deduction that's in place that we can all take advantage of will go up, which is good. It means we get a little bit more money that is, if you're doing the standard deduction as opposed to an itemized deduction, that's just a little bit more money you don't have to pay federal tax on. Married couples, the value of the tax break will increase by $800, so about $400 for singles. So for a married couple, the new standard deduction next year will be $25,900. Not life-changing by any means, but again, in this high inflation environment, Ron, we'll take anything we can get, and this is a little bit of a plus, a little bit of a good news. Likewise,
yeah, every little bit helps.
It does, doesn't it? Right? The maximum contribution for many of the folks listening have flexible spending accounts.
Yeah.
There's a limit to how much you can put in each year for your flexible spending account. They're a great deal if you can qualify for them. It goes up from $2,750 a year, $2,750. It goes up to $2,850. So it's roughly an extra $100 you can put in your flexible spending account. And you've heard us talk about those before. If you qualify for a flexible spending account, please take advantage of it. It's one of the best tax advantage buckets you can save in. You can talk to me about how the best way to utilize it is. So for a single tax filer, mm-hmm. the standard deduction goes up $12,950. So $25,900 for a couple, $12,950 for a single. So that's all good news, Ron.
I appreciate you putting all those numbers out there. It is nice to know that we have some concrete numbers and plans that we can start to anticipate and plan for. And I know that's a little bit of a relief for folks listening to this podcast. Is there anything else that we're pretty sure of going into 2022, Dave?
Yeah, there's been some increases to your contribution amounts for 401ks. Let's take a look at those numbers. For 401ks for 2022, the amount you can contribute on your 401k has gone up. The new maximum employee contribution is $20,500.
Okay.
The maximum contribution combination of you and your employer, assuming they do matching or something like that, is $61,000 a year. That's an increase. Mm-hmm. So again, that would potentially, if you took advantage of that, reduce your tax liability for 2022.
Okay.
And if most folks know that if you're 50, you get a catch-up amount, right? So the catch-up gives you an additional $6,500 into your 401k. So instead of $20,500, it's $27,000, right, that you can put in. And if for the combined goes up for you and your employer to $67,500.
All right. Love those catch-up contributions for sure.
Yeah. Now, this is a big one that's going to affect just a few people. But if you are a small business owner, please listen to this. And if you're not, and your brother-in-law is, or your sister is, or you have a friend who's a small business owner, hey, please pass this on and tell them to give us a call. There are some changes coming down the road that have to do with solo 401ks, which most folks have never heard of, but they are a big opportunity for a small business owner to save some money. And cash balance plans. Again, that's another retirement type plan that a small business owner can take advantage of, and it can save them a fortune if it's done right. Most small business owners, Ron, they don't even know that those exist.
Yeah.
And it's costing them a lot of money. So for anyone out there, again, it's just we have a passion for this. If you know someone who's a small business owner, have them give us a call and find out what they could do to try to minimize their tax bite in 2022, because there are some things we can take advantage of.
Well, we don't have time to go into it in all the specifics right here, but if you'd like to take a deeper dive into that, just give Dave's office a call, and you can arrange to have a one-on-one conversation about it. 540-720-5656. Dave, what about IRA contributions? I know especially for those in or close to retirement, This is something that's utilized often. What changes are we looking for in that area for 2022?
Yeah, that's interesting, but unfortunately not surprising. The Irs Contribution Limits did not change. So you can still only put $6,000 deductible into an IRA. Again, if you're over 50, there's a catch-up of $1,000, so it's $7,000. So that's unchanged. Now, it's interesting. That it just does not seem fair, right? If you are eligible for a 401k now, you can put 20, if you're 50 or above,
yeah.
What did we say? You're 50 and above, we can put $27,000 in your 401k, right? But if you're not lucky enough to have access to a 401k, you can only save $7,000. But that's the way it is, right? So one of the things we work with our clients on, and I'm telling everyone that's listening, if you're trying to reduce your tax hit in a given year and you're still working and you have access to a 401k, that's a good place to do it if you want to put in more than $7,000. If you don't want to put in more than $7,000, an IRA gives you more options than a 401k does. But again, it's specific to everybody. Call us, and Ron, you've given them the number, which I appreciate. Don't forget, you can also go right to our website, ilgfinancial.com. Everything on that site, and we have a vast amount of information and reports, and you can access all of our podcasts and our blogs. You can even hit a button and reach out to us there so we can call you back and set an appointment. So don't forget to check out the website and see what's new and see what's relevant to you.
Yeah, and on a lighter note, you can also get access to an 8x10 color photo of Dave Lopez, suitable for framing, if you'd like to check into that.
Yeah, but don't draw a mustache on it like Ron did.
I'm sorry about that. I wanted to get creative. But there are certain things that we all need to be, paying attention to right now. We know taxes are going to go up at some point, and there are some changes in 2022. And, of course, Dave Lopez has taken the time to detail some of those. But if you'd like to get more in detail about all of that, then give Dave Lopez's office a call at 540-720-5656.
Yep, I appreciate it. Yep. Do I get my last takeaway?
Oh, yeah, please do.
Yeah, so my last takeaway, Ron, would be this. We don't really know for sure. Nobody does. Your accountant will tell you the same thing, what's coming down the pipe, right, once they negotiate everything. We don't know how many changes are going to happen or how often they're going to come into and if they'll affect you in particular. But here's what we do know. Change is coming, and it's already begun.
Yeah.
So it is critical that if you haven't already done so, you get with your hopefully fiduciary financial advisory firm like ours, hopefully ours, right? But if we're not a good fit for you, please find another one that specializes in folks in or near retirement. They're an independent firm, and they're also a fiduciary. Get with them and get with your tax planning specialists and talk about tax planning moves you can make if you are anticipating a rising tax environment, not just 2022, but over the next 10 or 20 years of your life, because there are steps we can take for you to dramatically improve your position, start to shield you from some future legislative risk, lower your tax bite, but you have to plan and be very proactive about it. The higher your income, Ron, the more crucial it is that you get your tax planning under control, because they've made it very clear, the administration, that they are targeting folks with incomes above $400,000 or with big retirement and savings accounts. They're being very clear that that's the people they're going to be going after. And if it doesn't happen in this new Build Back Better bill, it's going to happen in the next bill, because they think that's the low-hanging fruit. So remember, even though these new higher brackets may help you with taxes this year, there are many strategies that you can take advantage of even now to try to prepare you, and that'll help you down the road as these rules change. So the time is now to set yourself up for success, right? If this is something you're not sure about, or you haven't addressed, or you don't know where to start, or you just want someone else to take another look at what you're doing to see if you've missed anything or there's any red flags, give us a call. Don't wait until the new tax laws start rolling out. Give us a call. Michelle or Megan will get you on the calendar for Chase or I. We'll take a look at where you are, and we can start building out a plan that's in your best interest.
Again, that number to call is 540-720-5656. That's 540-720-5656 for ILG Financial. Dave Lopez, it has been my pleasure to hang out with you for a while today. You passed along a lot of good information, and I know you're going to have a lot of folks call to get more specifics on their individual tax situation.
It is. We love helping, and we look forward to it. So just don't set this aside because, everybody knows there's that pain and regret of missed opportunity. But it's even worse if you knew that you should have done something, but you never got around to doing it. So it's kind of a double-edged sword. The problem is now I've told you, right? Now you know. So please take action because it's going to be a double painful if later something happens and you knew what to do. You just didn't get around to making the phone call. And have a happy holiday. You, Ron, and everybody listening.
Oh, absolutely. And the same to you, Dave. And I hope you enjoy it and get time to spend with your family and friends and enjoy it.
Yep, and if I'm not mistaken, I will talk to you and the listeners in the new year.
Yeah, absolutely. Income, legacy, growth. It's all right here at ILG Financial with Dave Lopez. You're one step closer now to learning what a customized retirement strategy can do for you. And always you get that kind of wisdom here on ILG Financial's Retire Your Way podcast with Dave Lopez. The information provided is for educational purposes only and is not intended as investment advice for any individual or entity. All information contained herein is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. The views presented today are those of Dave Lopez and do not necessarily represent the views of the Alpha Star Capital Management, LLC. The opinions expressed are subject to change without notice and do not constitute financial, legal, or tax advice. Please consult your financial professional before executing any financial strategy. Investment advisory services offered through Alpha Star Capital Management, LLC, a registered investment advisor. Alpha Star and ILG Financial, LLC are independent entities. SEC registration does not constitute an endorsement of the firm by the Commission, nor does it indicate that the advisor has attained a particular level of skill or ability.